on an amazing global fintech innovation panel. I'd like to introduce Lyle El-Hadi. She's the Executive Director of Fintech Cadence. Over to you. Take it away.
Hello, everyone, and welcome to the panel on global fintech innovation and game-changing markets. I'm really excited to be here as your moderator for the session, and I'll be introducing the panelists shortly. But first, I'd like to introduce myself, Lyle El-Hadi. I'm the Executive Director of Fintech Cadence, an organization that aims to create startups that will help solve the financial industry's problems through the integration of technology here in Canada. As I said, I'm really excited to be joined by my wonderful panelists of Abe, King, and Sharon. And I think you guys are in for a really good, interesting conversation. So I'm going to hand it right over to them so that we can get started. And Sharon, we'll start with you. Can we do your first introduction?
Sure. Thank you. Thank you, Leila, and thank you, the rest of the panelists, and of course, FFCON. So I'm Sharon Kinyanjui. I'm the principal consultant at Diaspora Bridges Advisory, DBA for short. We are a consultancy that works together with fintechs across Africa and VCs in order to implement sustainable payments platforms. So we work alongside the fintechs to ensure that they're able to scale quickly across different markets, and of course both receive and collect payments so that they can grow. Thank you.
Wonderful. Thank you very much, Sharon. King, I'm going to head over to you next.
Great. Thank you for the kind invitation. Again, it's a great pleasure to meet with all of you. My name is King Leon, Head of Fintech of Invest Hong Kong. Invest Hong Kong is a Hong Kong government department responsible to foster the growth of the ecosystem of fintech, which includes all the various segments from payments to wealth tech to insurtech. Of course, with the more exciting part of the whole digital assets developments is also under our remit. We also work very closely with the regulators, essentially to help the policymakers and the regulators to collect the intelligence about market needs so that we are able to launch a more conducive environments for the fintech firms to grow in Hong Kong, using that as springboard to grow regionally and globally. So again, it's a great pleasure to share all these insights with all of you.
Wonderful. Thank you very, very much, King. And last but not least, Abe, I'm going to hand it over to you for an introduction.
Thank you so much, Layal, and thank you for having us. My name is Abe Carrara. I'm the Chief Product Officer at Fintech Galaxy, and I am a proud Canadian from Toronto. So I'm actually happy to be sharing the perspective from where I am right now, which is working mostly in the Middle East and the GCC, but hoping that some of the insights we share about the observations and the learnings we see here would help Canada. The focus of the work we do at Fintech Galaxy is on open finance, open banking, open data, and really how we can help fintechs to integrate with the banks and then manage that seamless flow of data and payment capabilities and such. So very glad to be here. Thank you.
Wonderful, Abe, and I won't hold the fact that you're from Toronto against you. That will be a bonus. So as every one of our audience hears, we are really joined by a wonderful panel from all different experiences across the world. So really excited to dive in and get into the nitty-gritty of what the fintech ecosystem looks like for your respective regions. And so let's start with that. I'm really interested to see what does fintech look like for all of you guys. And maybe Sharon, this time I'll start with you, but I'll give you a break in the next question. But Sharon, can we start with understanding what is the current state of fintech in your region, the market size, general demographics, what's really happening there?
Sure, I'm happy to start, and I'll say that I think there's been a growing global recognition that Africa is the new fintech frontier. Especially, it's been a hotbed for investors. If you look at especially the last from between 2020 and 2021, the number of tech startups in Africa tripled. So about 5,500 fintechs, 5,500 tech startups, and half of which are basically fintech. So a lot has been happening in our region, especially in relation to fintechs. And more importantly, I think investors are starting to see a return on their investments when they invest in fintechs on the continent. In 2020 alone, I think there's some stats that talk to the fact that African fintechs made between $4 billion to $6 billion. And that's really roughly in line. If you look at the same numbers back in for global fintechs, they were par on par with Africa fintechs. And what we've also seen is, as the years have progressed, especially last year, the deal ticket sizes have increased. which is testament to the fact that the fintechs are doing really well on the continent. And then more importantly, I think it's job creation. You know, Africa is one of the continents with the youngest youth population globally. So fintechs really enable us to tap into that opportunity and give the youth an opportunity to grow. So I think there's a lot that's been happening in the region when it comes to fintechs, and the trend has been really positive overall.
Yeah, that's really fascinating to hear, Sharon. And I know you're speaking on behalf of a whole continent, and that really can be quite difficult to navigate those cultural nuances. But you know what we said, I started in fintech in Canada maybe 6-7 years ago. And what we would often say is that the uptake of fintech in different African countries is really leaps and bounds ahead of the uptake by consumers here in Canada. And I think our stats is something like 98% of Canadians will stay loyal to the first bank they join. It's very difficult to move clients from customers from banks to a fintech app. It's always usually an ancillary add-on service. There's always those kind of a high customer acquisition cost for fintechs in Canada. So I'm very curious, as a follow-up to that, Sharon, how you see the uptake of fintech products by consumers in the different countries that you interact with.
Yeah, you're right. I mean, yeah, Africa's not a country. I mean, it's a continent, 52 plus markets. But generally what we have seen is a high uptake. I mean, I'd like to say, I mean, in many instances, if I take even one country, Kenya, I'll be a bit biased because it's where I am from. But, you know, it's the home of mobile money, right? So if you look back from 2007 to now, the penetration of mobile money in Kenya alone is like 87%, even higher than banks. I know that's one of the things you referenced. But this is one of the few markets you would be hard pressed to find a checkbook. You know, everybody pays for everything utilizing their mobile money wallet. From your Uber to your supermarkets, you name it, everybody's using mobile money. So that's just an example of what a fintech could do, because essentially that's a telco taking on that fintech role. And on the platform of M-Pesa, so many other fintechs have grown, right? Because once you create a payments gateway that everybody else can balance on, it makes it very easy to create other fintechs on top of that. And that's what we have seen in places like Kenya, and across many other markets, you know, across Africa. So if you look at even markets as far out as Senegal, you know, they recently also embraced Wave money, right? So on the back of that, you're seeing a hotbed of other, you know, fintechs uprising up in Senegal. So as long as you're able to have that infrastructure in place, I think it creates the right environment for for other fintechs to come. Now we're seeing fintechs in the space of loans, in the space of you know, even retail, to be quite honest. You know, it's really exciting stuff. Yeah, but yeah, so yeah, we've seen a lot.
Mm-hmm. So much to get into that, Sharon. So many key things that you're saying. I love what you're talking about telecom as well. I think seeing what Zain did in the region too is another example that comes to my mind. But seeing all of that interaction. And I think the big trend in fintech over the last 2 years has been everything is fintech. So really excited to get into that a little bit more later on. Thank you very much for that perspective, Sharon. King, I'm going to jump to you. Really interested to hear what fintech looks like in Hong Kong right now.
Well, the short answer is very exciting because there are just numerous new trends emerging in front of our eyes. Now, so naturally, the one thing that have been on the news quite a lot since last year has been the developments of the digital assets / crypto bit space. And when a lot of the, I guess, you know, the debacles that we have seen from the FTX to the Luna, the Three Arrows, and so on, a lot of folks are really stepping back, including some of the other markets that used to be very progressive, and now they're taking a step back. But interestingly, the Hong Kong governments, for us, we actually stepped forward on the October 31st, which was the first day of the Hong Kong Fintech Week. Many of the senior officials or governments, from the financial secretary to the leaders from regulators, we basically came out in concert in support of the tokenization of assets. Of course, I think a lot of folks would be confused between the asset tokenization versus crypto. So naturally, crypto is part of it, but it's only a small part of it. At the same time, for us, we see that Hong Kong is a international financial center. We would like to look at the tokenization of real assets as the new frontier, where we're able to create more efficiencies across various from the funding, the cross-border payments in many fronts. So that's exciting, and particularly with the advent of Web3, in which there's a big component of the tokenomics that also ride on tokens to power like social-fi, trade-fi, game-fi, everything with the FI tie into it. Now, I think the one way that we like to look at this is that maybe I'll just use two quick examples to illustrate what I mean by this new frontier. Now, particularly for payments, for example, because Hong Kong as the international gateway for China with the rest of the world, there are many trading partners, such as, for example, in Latin America, or even like Canada and a lot of Australia and so forth. There's just many countries in which China is almost always the number one or number two trading partners. And because of that reason, a lot of the exporters from China would have to ship their goods to the various overseas countries, or maybe China buying, for example, commodities from the Latin countries and so on. Now, but then oftentimes there's so much inefficiencies that we often see, for example, payments, overheads or the fees upward of 6% on average, and also the long delays. So a lot of times when we talk to the players in these markets, they are often really looking forward to having, let's say, blockchain-based payments rail that in a way that presents a whole new, infrastructure with faster cross-border payments, lower fees, and so on. So this is just one way where we see the tokenized assets and also using blockchains infrastructure, creating an enormous efficiencies and opportunities for the market. Now, the second one is really about allowing the various assets to be tokenized. It can be bonds, it can be, various like real estates, private equity funds. Even recently, we talked to a number of players from Japan, for example, with a lot of amazing IPs in the form of various like cartoon characters that many generations of people are used to seeing. So now being able to have a new way to put these IPs into daily use on different use cases in the form of NFTs. So all these things are creating new opportunities for the, I would say, sometimes the overlooked or the, I would say the underprivileged, if you will, that may not be working in the large corporates, but nonetheless equally talented folks, artists, and so on, that they are now finally able to use this new infrastructure to create some regular income for themselves with a very high efficiencies, injecting income into digital wallet and so on. So there's a lot of things that can be done, particularly in the form of financial inclusion. So I can keep going on and on and on. Maybe I'll just stop here. I'm happy to dive in deeper on this exciting new frontier.
I cannot tell you how exciting that is. I feel like I could spend an hour with each of you guys just diving into all of those things. Some of the things, King, that you really mentioned that came up is, Canada, and I'm sorry, I have to bring it back to Canada as that's my reality, but, Canada has always been very wary of cryptocurrencies and interactions around crypto, even though Ethereum started in Ontario. There's another shout out for you, Abe. So it's really interesting to see that despite everything that has been happening with crypto in the past, the approach that Hong Kong is taking, not only with the crypto, but tokenization as well, King. So thank you for that. It's also really fortuitous that right now, I think CIBC just announced a few days ago that they're going to be working on an RTR system with Alipay. So Canada's not on an RTR system yet, but is looking at doing that over the next 2-3 years. So really interesting to see what you were talking about, the real-time payment systems and the international trade boards there as well. And of course, I can spend hours talking about the underbanked and financial health and financial inclusion with you, but we really have to get into Abe. I'm really excited to hear about the perspective of the Middle East from you. So thank you very much, King, for that introduction. And we'll dive in a little bit deeper in the rest. And Abe, I'm going to ask you now what the region looks like in fintech for you.
Well, to be very honest, Leila, it's actually quite fascinating. MENA is really hot when it comes to fintechs, and we've seen that the number of fintechs have actually been growing year over year. As of 2022, I think the most recent reports indicate there was almost 800 fintechs across the region, and there is a high concentration of these fintechs primarily in the Gulf Cooperation Council or the GCC countries, so the UAE, Oman, Qatar, Bahrain, and KSA. But what's also interesting is to see like some of these sectors that really have had the most growth when it comes to fintechs. Obviously, similar to the African continent, remittances is a big thing, especially that most of the expats who come to the region and especially to the GCC are coming to work and make money, and then they send the money back to their families in, Pakistan, Bangladesh, India, Philippines, and so forth. So there's been a huge push on digital payments and remittances. In fact, if I'm not mistaken, I think in 2022, there was $1.7 billion worth of investment in that sector alone. What's also interesting to note is in my specific domain, which is open banking and open finance, there has been a tremendous amount of transformation and focus. So starting with Bahrain, that back in 2018, they pushed out a circular by the Central Bank of Bahrain, the CBB, about open banking coming. And then between 2018 and 2021, they managed to, establish a framework where they covered everything from the specific API specifications for, account information services and payment initiation services, including all of the operational guidelines, the customer experience guidelines, the disputes and liability models, and even going to the extent of providing guidance around the expected customer journey, how you manage the consents, how do you manage, the strong customer authentication and so forth. But what's fascinating is then to see, some of the similarities between the different countries within the region when they embarked on a similar journey and some of the major differences. So as it stands today, Bahrain is still considered the one country in the region that has implemented open banking. However, noticing that they didn't implement it for business or corporate bank accounts, it's only limited to retail. So that was, one area that they're now trying to launch their new framework, BOBF, Bahrain Open Banking Framework 2.0. And you'll see that countries that followed, specifically Saudi or KSA, Kingdom of Saudi Arabia, they learned from that and they issued their regulation. Phase 1 has already been, published in November of last year, and it covers retail and corporate. Another thing where you see the difference is where Bahrain, their use cases around open banking were very much functional, like domestic payments, standing order, account aggregation. When you look at KSA, they took more of an approach where the use case is an actual business scenario that solved the business problem. Example, automated tax submission to ZATCA. ZATCA stands for the Zakat and Tax Authority in Saudi Arabia, or BFM, Business Financial Management, or enhanced credit scoring. So taking credit bureau and taking transactional history and augmenting the two to come up with enhanced credit scoring. They went to the extent of actually creating a use case that has never been implemented in the world when it comes to open banking, so not even in Europe and the UK, which is being able to request an LG, a letter of guarantee that gets directly sent to the supplier, again, through open banking APIs. So when it comes to, again, the hot sectors, I mentioned remittances, digital payments, open banking, open finance is huge. And then, of course, on the back of that, we found a lot of companies that now are focusing on, micro lending, micro insurance, peer-to-peer crowdfunding. But now let's take a look at some of the other countries. The UAE. The UAE recently published a circular. I believe this was probably last month, if I'm not mistaken. So literally about a month ago. And the central bank said they are launching something called the FIT program. So again, this is exactly what we're talking about, how, fintech is looking. The focus, the sheer focus is just, unparalleled. FIT stands for Financial Infrastructure Transformation. And they launched 9 initiatives that they are embarking on, starting with a domestic card scheme. Imagine that. So they're trying to say, guys, 3% to MasterCard and Visa, way too much. let's build a domestic card scheme that will be used to facilitate, some type of e-commerce digital transactions. They're also pushing a new KYC, centralized KYC platform that doesn't just focus on retail consumers, but also KYB. Another interesting, one of these initiatives, the 9 initiatives, is CBDC, Central Bank Digital Currency. And their focus there is to really enhance cross-border payments, as well as facilitate domestic usage. Open Finance is the one that, and this is interesting. Initiative number 4, Open Finance, not open banking. They didn't follow Bahrain's footsteps. They didn't follow Saudi's footsteps. They said, we're leapfrogging. And when you think about it, when you look around the world, the only countries that have done that are the likes of Brazil, Australia, Mexico, India. But even when open banking started, it typically starts just focusing on payment accounts and only focusing on data, then focusing on payment. But what they've done as Open Finance is they broke into 3 phases. And in their first phase, they brought in some of the core functionality of open banking, but they also threw in mortgages and insurance. So now we're bringing in insurance companies in the mix. And when it comes to payments, they're deploying something called VRP, variable recurring payment, which is a game changer, honestly. And we could talk about that till tomorrow. They are also introducing, as one of their 9 initiatives, the use of SupTech, so supervisory technology, launching an innovation hub to really, foster that culture of collaboration between the banks and the fintechs. So again, when it's something that is regulator-led, you can only imagine how that attracts, global fintechs to come to the region, and how even local fintechs feel more at ease approaching financial institutions and collaborating with them. And then the last 3 initiatives, just so I don't take too much time, instant payment. And although they do have, quite a decent, payment rail in the country, but again, you notice that with open banking coming to Europe, or the implementation of PSD2, I should say, and in Bahrain, and also in the UK, most of the time, to really maximize the value of open banking or open finance, you need to have the ability to issue secure payments and instantly. And imagine merchants who now want to accept pay by bank rather than pay by Visa, MasterCard, and pay 10 times less fees. This would only really work if you can get instant settlement through an instant payment rail. So again, that would be initiative number 7. And then they are, because the GCC countries and the MENA countries in general lack some of the cloud infrastructure that may exist. Like, for example, in the region, only Bahrain has AWS at the moment. Saudi only has Oracle, OCI. And UAE only has Azure. But then look at Egypt, look at Iraq, look at Libya. They don't have any cloud. So a lot of these countries are now thinking of building their own financial cloud. So even in the case of the CBUAE, although Azure exists, and if I'm not mistaken, even AWS is coming to the country, but because of the requirements, the compliance requirements when it comes to data residency, data sovereignty, and all of that, they are building their own financial cloud. And last but not least, initiative number 9 is really focusing on customer experience and customer excellence, which to me, again, is fascinating, because a lot of, a regulator typically would think about consumer protection, or would think about, cybersecurity, or would think about, more of the infrastructure. But the fact that they are taking this angle where they say, we're going to motivate fintechs, we're going to motivate banks, we're going to, implement these, initiatives, but it cannot really succeed unless we take a customer-centric approach and we really foster a culture of excellence across the financial sector. So that's, again, just a quick touch on, some of the key focus area that I've been seeing. And again, like even the other countries like Egypt, Iraq, Libya, a lot of people think these are third world countries, but, believe you me, there are some incredible initiatives that are happening in these countries. Palestine, the PMA, the Palestine Monetary Authority, and the PCMA, the Palestine Capital Markets Authority, are also launching some incredible initiatives around, a single investor ID that could be used across the region. So when you're working with stocks, you're not just limited to that one geography. So there's still a lot to, it's still a long way to go, but I am, when I came here about 4 or 5 years ago and I saw QR code payments, I was like, I thought Canada was quite advanced, and I saw some really interesting things that were done in this region. So I'll leave it at that, but we could dive more on any specific topics you like.
Oh, you're absolutely right. I could spend hours diving in, just as I could with Sharon and King. And it's so funny you talk about that. We're so ahead. And I think that's why, really grateful for FFCon and for you guys for coming here and spending time, because it's really important for the audience who is from Canada to see just exactly what's happening internationally and the leaps and bounds that are still being made and where we need to catch up on. So really wonderful. I do have so many follow-up questions for you as well, Abe, just on what you said, but maybe I'll focus them on 1 or 2 specific things, and then we'll get going into what the challenges are of your regions, because everything so far sounds really wonderful in all of your regions, but really diving in. But I'm very curious in terms of the cloud services component. Saudi Arabia, UAE are notoriously very tech forward, investing in different tech, across, I think, what the Kingdom of Saudi Arabia's tech fund is invested in Uber, Twitter, if I'm not mistaken, a whole bunch of stuff. So I'm very curious as to why cloud services are a little bit behind. And I don't mean that in a negative sense, but why the cloud services aren't as incorporated in the region.
It's actually very interesting. And without trying to, dive into some of the, potential politics that may also be some of the reasons why a regulator might actually ban some companies from operating in the country. But let me maybe take a step back. In Saudi, the only cloud provider they have is Oracle. And that's because they put them through a very rigorous process to ensure that the data is protected. There are all the right measures. And I know that Oracle, is definitely an international brand, just the likes of AWS or Alibaba Cloud or Google Cloud, etc. But the regulators here have very specific requirements, and it is a bit political, it's a bit cultural. And I feel, even when we are working with financial institutions from different countries, we oftentimes hit this, this roadblock. Like right now, I'm actually speaking to you from Jordan. I am in Jordan. I'm in Amman, and I'm here also speaking to some financial institutions. And guess what? Amman has no public cloud, 0, doesn't exist. So to answer your question, like, why is that? Again, the regulators here have that, perhaps I don't want to call it an irrational fear, but the level of compliance, they're very risk adverse, and the level of compliance and regulation is very restrictive in that sense. Now, with that said, I've also learned that one of the banks in Jordan, and the only bank, has actually managed to deploy its core banking and its CRM and its entire solution on AWS in Dublin. And you see, so when I asked the bank, I'm like, so how did you guys do that? Because obviously we know how strict a lot of the regulators in the region are. And they said, we made a very, we went through a massive checklist. We provided all of the required documentation. We showcased the different type of security standards and security measures in place, and it became an exception process. Now, I feel when you look at the CBUAE and them implementing this financial cloud, this is to eliminate the need to get exceptional approvals, and it's to kind of ease some of these constraints that do exist today. But going back to your question about challenges, cloud is definitely a challenge, but I also feel that the fintechs in the region, although they are growing dramatically, because it's not the European Union, every country still has its own set of requirements and its own set of regulatory constraints. And it's not easy for a fintech to do any sort of license passporting. So even if you got licensed by SAMA, the Saudi Arabian Monetary Authority, or the central bank, you cannot just knock on the door of Bahrain and say, hey, guess what? I got licensed, I can do microfinance, can I operate? You have to go through the entire process all over again. And it's it's quite ridiculous because even if the player is an open banking player and you're already adhering to all the open banking requirements, that doesn't exist. The fact also that the regulations are quite different. So even when you look at something as standardized as open banking, KSA have different authentication and authorization flows than that in Bahrain. So, and by the way, pointing this out because obviously it's good to recognize the challenge, but this is why we exist. Our job is actually to build that translation layer. So we give the fintech that one integration point, and then we take care of all of the translation of the API endpoints, the authentication, authorization mechanisms, etc. And I'll give you one more last one. You know, the startups here in the region are quite ambitious, and we have, and I know we will talk a little bit more about the financial institutions and how they're dealing with this whole fintech surge, but access to funding is a bit limited. And you know, you of course you understand when you look at countries like Egypt or Libya or Iraq, it's not the same when you look at Saudi. And I'm talking about the money, the funding. So unless you're a startup who's able to talk to VCs and talk to investors in some of these GCC countries, oftentimes you don't get the right funding support, etc. And oftentimes, like, we are going through this, like we are technically a startup, and investors will say, oh yeah, you want to get funding? Well, move your headquarters to Saudi and come and serve the Saudi market, and only then we will consider supporting you. So again, it's some of these nuances that, you know, would, you know, create some of the challenges and the friction points for the fintechs.
Yeah, absolutely fascinating, Abe. And like I said, lots of follow-up questions. But I do want to jump into the Hong Kong region now. So King, I'm going to jump to you. And we've touched on the challenges that Abe mentioned in the region, capital access, geographic, regulatory challenges in each region, et cetera. So cloud services. I'm very curious to hear from your perspective. What are some of the challenges for fintechs in Hong Kong?
Well, I think the challenge will be universal because when we look at the Hong Kong market, basically the 2/3 of the fintechs in Hong Kong are engaging in B2B business, now, which makes sense because Hong Kong is an international financial center. So there are literally thousands of financial institutions in Hong Kong. Again, we are just a city of 7.5 million people, but yet there are 160 banks, 160 plus insurers, like thousands of wealth and asset managers, and the brokers, securities firms. So in a way, that presents a very attractive B2B environment. Now, so in a way, I think in a way, I'd like to sort of go back to some of the comments made by Abe just now, because a lot of times when we're talking about a fintech, particularly those that require a license, especially B2C, like consumer facing, oftentimes the business cannot easily transfer it from one jurisdiction to another without going through another laborious and expensive license application process. Now, so for B2B, in a way, yes, I think they might have some nuances to get over, but then by and large, since most of the technologies are not required to have a license to operate, so for B2B firms, they can transfer it from one market to another more easily. So in fact, when we talk to some of the investors, that have done a great job in basically benchmarking the performance of B2C fintechs versus B2Bs. I mean, I'm talking about global. And we recognize that the B2B fintechs, basically from a return of investment perspective, basically outperform B2C by fourfold. So they outperform four times as much. So this is incredible. Now, and as a result, for us, I think the challenge, going back to the question, is how are we able to use the strength as a international financial center for the firm engaging in B2B based in Hong Kong, but then to help them to grow to other regional markets, which in itself is not easy, despite the fact that they don't need license to operate. So the way that we try to help these firms is to really try to create an international VC network. So that's why for us, in fact, I just came back from Toronto. I was in New York City last week, the Bay Area a few days earlier, and I've been flying out to Tokyo end of the month. I'll be in London mid-April. I have 11 international trips this year. So the reason is because every market that I visit, I'm trying to expand the reach and the alliance with VCs. So naturally, as we create this almost like global VC alliance, then we are able to introduce the fintechs that are already in Hong Kong. They can be homegrown in Hong Kong, or they can be from, say, Switzerland, using Hong Kong as a springboard to grow to the rest of Asia. But yet they need help to grow to like North Asia and so on. Then we got a few very helpful VCs in Japan and help them to penetrate into the Japanese market. So this is a way for us to address the challenge to basically grow and scale regionally and globally.
Yeah, and I love that tactic. I'm curious, and I apologize if I missed it, King. Do you know the number of VCs specifically that are based in Hong Kong?
I don't have the exact number, but just so you know, we have an organization in Hong Kong that is the oldest and the most established of such association called Hong Kong Venture Capital and Private Equity Association. So by the name of it, I mean, that encompasses all the major VCs and PEs. So to my knowledge, they have just short of 1,000 members, something like 800 to 900. Now, and interestingly, as I talked to the chairman of this association just last year, I asked them, oh, by the way, so for all these VCs and PE firms addressing the funding needs from the very front end, with the seed, Series A, all the way like the pre-IPO funding, actually the overall AUM, the overall asset under management, we're talking about $2 trillion US dollar. So all these members, if you add up all the funds that they're managing, we talk about $2 trillion US dollar.
That's crazy. I was actually just looking at, out of interest of all the banks in Canada's AUM, and I think our biggest bank, Royal Bank, is at 1.1 trillion. So quite a significant number that you guys have there, King. Very, very interesting. Perfect. And then last but not least, Sharon, I'm really interested to hear about the challenges. I know probably some of them, like King had alluded to, would be very universal, but very interested to hear from your perspective. What are some of the challenges you've seen?
Yeah, I would definitely echo what both King have said and Abe has also talked about. It's definitely regulatory. I think, one of the biggest challenges we face across Africa is, again, it's 54 countries, the majority of which actually have their own central banks with their own rules and regulations. I think this inability to be able to passport 10 licenses and to operate as one entity has been one of the biggest challenges that we face across Africa. And everybody's perception and interpretation of the same regulation is different, and everybody's moving at different paces. So if I look at someone like the Central Bank of Nigeria, almost 1.5 years ago, they were one of the first in the world to launch a digital currency, so they were ahead of the game. But other countries are still looking at what regulation would be required to go into such a space, right? And yet, to be able to capitalize on the gains that they are, across Africa, it really needs that unity to be able to experience the same gains that places like Europe experience, right? But I don't want to make it sound like it's all doom and gloom. On the other hand, there are opportunities. I mean, recently there's AFCA, which is the Africa, let me make sure I get it right, but basically it's the Africa Continental Free Trade Agreement, which came into place and was launched in Jan 2021, and that operates around 43 countries across Africa. So it targets about 1.3 billion people. And talking about trillions, the combined GDP of those countries is $3.4 trillion. So the whole idea behind this is basically to cut the red tape and simplify customs so that we have about $292 billion worth of trade. So looking more on the B2B side of things, like King alluded to, and basically launching more free trade across Africa so that a person in Togo can get paid by a person in Tanzania for the goods that they shipped. And I think that's really what's going to escalate us and take us to the next level, right? And that really opens up, I think the B2B space is also what will open up a lot of the opportunities across Africa. It's the area where we currently have a lot of challenges, but I think it's also the area where we'll get a lot of breakthrough. And that will the AfCFTA will also allow trade finance facilities with commercial banks across Africa to support both women and youth. They say that about 60% of SMEs run on the continent, which is about 60% of the African GDP, is actually enterprises run by women. Yeah. So it's really the SMEs that drive the continent. So you can imagine if you facilitate and allow the SMEs to be able to operate freely across one continent where the rules are very simple and everybody can operate across them, then I think it really brings a lot of opportunity. But currently, back to your questions, the challenge is around not having one particular, when we're not one block of countries. Africa is not a country, right? It's a myriad of different countries with different customs, different regulations, and that has been one of our biggest challenges that we probably need to overcome. I think the other one I would touch on as well is funding. So I think that's the squeeze is across the board. So I won't overemphasize it. I think it's been talked about and it probably will be talked a lot about at FFCON in different forums. But definitely, I think, funding is key. And especially, like I said, if you think about that, the larger majority of opportunities lies with youth and MSMEs, not even SMEs, but MSMEs, so micro SMEs. Really, it's about how do we make sure that those bodies are not just over-mentored, but they're actually funded. So I think that's another challenge that we see across for fintechs across the continent.
Yeah, it's really fascinating. And I'm also, Abe, you mentioned a comment earlier about being regulatory led. And Sharon, I bring that up because I'm really interested to see in a continent like Africa with the transition of unified financial interactions and financial principles mirror that of Europe, which is more policy-led, government-led, and regulatory-led, versus now having fintechs really be the advocates and the pushers of implementing a more unified interactions between countries. So really, really fascinating to see. I wasn't exaggerating earlier when I said we could spend a lot of time with you guys. We have about 2 minutes left. So maybe what we can do very quickly, because I do think it's important to address, and that is the relationship between fintechs and banks or financial institutions. I think we'd be remiss to not touch on that. So maybe very quickly, in let's say under 1 minute each, if we can just touch on what the relationship looks like in your regions of fintechs and financial institutions, that would be really wonderful for our audience, I'm sure. And Abe, we'll start with you, and then we'll come to the next panelists.
All right, I'll try to make this quick. So what I'm seeing is a lot of partnership and collaboration. If you would have asked me this when I had first moved to the region in 2019, it was more if you can't, banks were just trying to gobble up the small fintechs by just absorbing them, thinking that will remove the risks that they may feel. But now I think they realize that if you can't beat them, you join them. So there's a lot of partnership and collaboration, and we've seen it, between fintechs, leveraging some of the banks' IBANs or, virtual cards, etc., or banks, presenting themselves as a platform provider and embedding the fintechs. We've also seen some investments that banks themselves invest in fintechs. Example, we as a fintech and a startup, we have one of our lead investors in our last round was actually one of the leading banks in the region. I'm also seeing that there is a lot of collaboration where the fintechs are helping the banks to become more nimble. So really from a digital transformation perspective. And then last but not least, I feel that the relationship has really evolved, especially when it comes to the regulatory perspective. So when the regulator is seeing banks working with the fintechs, they start to realize that some of the let's call it legacy policies that may have existed before do not apply anymore. And as a result, it's actually triggering the regulators to update their policies and to update some of their regulations to facilitate more collaboration and to enable more of that, that type of culture in the region. I'll leave it at that.
All right, wonderful. Thank you very much, Abe. King, I'm going to jump to you. Relationship between fintechs and financial institutions.
I'll use a few numbers to put this in perspective in the interest of time. Back in 2020, the banking regulator in Hong Kong, Hong Kong Monetary Authority, they have commissioned a study. There's basically a survey that went to all the 160 plus banks, asking them about the various fintech adoptions across different segments. So it can be regulatory, it can be client-facing, it can be wealth management, and so on. Now, interestingly, when the survey results first came back, the number was quite high, actually 86%, now 86, which is quite high. 86% of the banks actually have been adopting at least one fintech technologies, which is great. Now, but then, of course, I think the regulator has been a strong proponent of these movements. So they follow on about a year and a half later, in mid-2021, they launched another survey. And this time, this is actually a bit more homework for the banks, in which the banks are asked to spend 6 months to go back and draft a 5-year plan of how they would adopt even more fintechs. So then they did the homework, and then the HMA, they presented the results to the ecosystem, I think in the middle part of 2022. And the results is quite amazing, because when we look at the previous result, 86%, a big part of it has been concentrating in the RegTech. In fact, by the time this report in 2022 came about, something like 92%, if I'm not mistaken, 92% of the survey bank have already adopted some kind of modern regulatory technology. Now, but then this report is fantastic, because they actually dive into other areas from like wealth tech, and then legal tech, and then there's fintech and so on. So that showcase like a deeper dive of where are some of the other, I would say, blue ocean for fintech companies to basically sell the banks. The point I'm trying to make is that the regulator is actually tracking the adoption very closely. So of course, for RegTech, I think we are kind of okay. But for the other areas, even for wealth tech, the regulator are really pushing the banks to be the leaders to adopt this technology, and the rest of them, the insurers and all the other subsegments in financial services will follow suit.
Okay, really wonderful. And then thank you very much for that, King. Last but not least, Sharon, want to quickly touch on how fintechs are working with banks?
Sure. I would say 20 years ago, especially across some markets, it was probably more, I would say, the first C, confrontational, right? But now what we're seeing 20 years on is almost another C, which is conjoint. So they work together in the same ecosystem. What we're finding is that, a lot of the banks are working together with the fintechs to sharpen their technology, to give better platforms of products. Likewise, we're also seeing a lot of fintechs becoming banks, digital banks. An example, for instance, is Branch, which was a digital lender. It acquired a microfinance in East Africa last year to allow them to become deposit taking and essentially a digital bank. So nowadays, I think there's a convergence. So that last C, I would say, is convergence, right? So we've moved from confrontation, and now we're at convergence. Where literally, all players are playing in the same pond. And I think that's a really good space to be, because all it does is basically make sure that we're all focused on the last C, which is basically consumers. And I think the regulator is also focused on how can we serve the consumer better. The financial institutions and the fintechs are all focused on the consumers, which I think can only be a good thing.
Could not agree more. And I think that is a wonderful place to end this panel. Sharon, King, Abe, I cannot thank you enough for your perspectives. I think this was more a teaser than really anything else. So if you're an audience member and you really want to learn more about any of these regions or working with any of these regions, please don't hesitate to reach out to our wonderful panelists. I hope that you guys enjoy the rest of the conference, and we look forward to seeing the panels that are following us. Thank you, everyone, and have a wonderful day.